Welcome back. This is day 8 of Road to Profitability series. In this episode, we're going to be talking about time, which is kind of exciting because the other last 7 videos have been very basic, very beginner stuff. Just the absolute essentials to ICT if you're starting as a newbie, beginner. This is where the mentorship starts getting good. It starts getting complex, detailed, nuanced, intricate. This is the meat. This is the good shit. So we're going to be talking about time, which so far in the lecture, we've been talking about the y-axis here. So if you think of the candlestick graph chart, you have the y-axis, which is price, it's going up and down. And then you have the x-axis, which is time. And the whole point of the algorithm is that we're hunting liquidity and fixing inefficiencies on a time-based algorithm. This delivers price at certain times. It's a time-based delivery system. So the entire x-axis is time, and we haven't even started to cover that yet and how it relates to price. There's a lot to talk about, a lot to go over. So I just kind of want to go over the weekly and daily, and then the next video will be about the sessions and macros and more specific. So coming first off, what we got here is, let's get rid of these lines. Let's start off with the weekly. If you looked at any of my Sunday outlooks, the first thing I look at is the economic calendar. Are we going, like, where does the red news lie, right? Let's just do that. Over here, I use a website called Forex Factory. I have bank holidays on, high impact news folders on. You can see orange and yellow, there's a ton, but these don't really affect the market. We don't care about them. We're only looking at USD because this relates to the indexes, which I trade. If you're trading like a Forex, like a GBP Euro USD pair, you check off these two, obviously, and they have different red folders than the USD. But anyway, you can use these red folders in the upcoming week to frame your trades, because these red folders are manipulation or expansions. They are in an influx of volatility, and they're used almost as like a mask to shield what the market makers are doing. So for example, the market makers want to send price higher. They'll wait and distort time and price to deliver this price at this red folder and make it seem like it's PMI moving the market at 945, when in reality the market's controlled and manipulated by an algorithm, and it's designed to go higher at these times, or manipulate at these times, or displace at these times, but they're used as a mask, as a, oh look, it's a red folder, an influx of volatility. So these are references in the algorithm to frame out your weekly bias. You can expect these red folders. Typically there's not a red folder every day. This is really good. You only really want to be trading red folders, red folder days, because this is when there's manipulation in the marketplace, and this is what you want to see as ICT traders. So on days where, let's go back to this week, you'll see Monday, no news, Friday, no news. These are going to be lower probability days. They're going to be less volatile, less manipulated, and that's not what you want to see. All right, and there's also a bank holiday. You don't want to be trading bank holidays. So here, we want to be waiting for the red folder to release. You wait 5, 10, 15 minutes after, and then you want to be looking for trades after these red folders. You don't want to be trading before, so if there's a Fed chairman speaking at 10 a.m., you want to be waiting till like 9. Not 9. You don't want to be trading before 10. You want to be trading after like 10:15, 10:20. If there's the 3 big red folders you got to look out for is CPI, NFP, non-farm payroll, and FOMC. Those days I typically don't touch at all, and I'm going to show you where they are right here. NFP is always going to be the first week of the month. CPI is typically the second week of the month, and then FOMC happens 8 times a year, so roughly once a month, sometimes not. So you can see CPI Wednesday, I wouldn't trade this day. Non-farm payroll, so the first Wednesday, Thursday, Friday of the month is NFP. Those 3 NFP days, I don't want to touch that at all. And then as you can see, FOMC right here on a Wednesday, June 18th, don't want to touch this either. They're touching interest rates. A lot of you don't want to be touching those parts of the market. So how can we frame this for our bias, right? And I have a pretty good example right here. Yep, right here. So let's look at this week, right? So this week opens up in the end of April. No, sorry. We want to be, no, yeah, it is this one. It is this one. Want to be and ending the week. Sorry, right here. So we have April 28th to May 2nd, week 4 of April. So we're gonna go back in the charts a little bit. Last week of April, 28th to 2nd of May. You'll notice. Wait. Yeah, no, it was the wrong week. So, from this Monday to this Friday, which is gonna be NFP week, I believe. Or no, this would be okay. All right, cool, perfect. This is FOMC week. So you see Monday, red folder, 10 a.m., perfect. Tuesday, no news, lower probability. Wednesday, FOMC. You don't want to be touching this. Thursday, Trump speaks. That's kind of an anomaly. That doesn't really happen. So maybe hold through it, maybe not. I don't know. Probably wait for it to come out. Friday, lower probability. Now, with just looking at this alone, you can expect the high or low of the week to be on this major impact news day. You can expect FOMC to put in the low or high of the weekly candle. So, what do we learn about the candlestick anatomy? We have an open, a low, or high, and we kind of expand up, put in a high, close. Right? This was a horrible drawing. Open, low, retrace, higher, close. Right? Candlestick anatomy, same for the weekly candle. So, typically, for ICT traders, a lot of them don't trade Monday because it's the accumulation of the weekly candle. So we accumulate on Monday, ranging. Tuesday has I think it's a 70 to 80% chance of putting in the low or high of the week. So it's just right here. Sometimes it depends on the economic calendar, like I showed. Like if Tuesday is CPI, it'll probably be the low of the week. If Monday has no news, no impact red folders, Tuesday's probably going to be the low of the week or high of the week. So Wednesday, probably some expansion with some red folder, maybe a retrace, put in the high on Thursday, and then Friday, no news, we close, right? And you can frame this with red folder days. So again, coming back to this, we have Monday right here, Tuesday right here, Wednesday right here, and Thursday right here, and Friday. Wednesday, Thursday, Friday. Friday looks smaller because it cuts off a little earlier, so do something like that. But we'll keep it there. Yeah, okay. So anyway, you got the high and lows of. Yeah, this is the weekly candle, right? We have the opening, Monday, ranging. Tuesday, put in a low. We have this high impact news folder, FOMC. FOMC puts in the low of the week here, takes Tuesday's low, and this is important for the context. And there are stuff to more kind of hone in how to predict the weekly candle, but for now, you can get a pretty good grasp of it just on time of these economic calendar events, which again are aligned with the x-axis of time. So Wednesday, we're already expecting to put in a low of the week. We take out Tuesday's low with a stop punt and instantly start displacing out of it. So let's go into the 15-minute and check this out. You can see after we hunt liquidity, we displace out of it right here. We're not leaving fair value gaps, which is something I would expect, so probably in the lower time frames. On the 5-minute, I guess I can't go that far on the 5-minute, so we'll stick to the 15-minute. But anyway, you could expect fair value gaps to be made after the stop hunt, and that's so you can confirm it. We have a market structure shift here. We have a change in state of delivery right here, which I prefer over market structure shift. And if you don't know what change in state of delivery is, it is just so this is the set of down close candles that took out liquidity, and it's the bodies. If we close above this body, that would be a change in state of delivery, which again is very similar to a market structure shift, except the market structure shift is just the close above the wicks. So change in state's very similar. I prefer it better. So we can confirm that this is the low of the week with this change in state of delivery on the 15-minute. You can use the 1 hour too. Usually on the weekly candle, I prefer the 1 hour. So it actually comes sooner here. So change in state of delivery be right here. We close above this last, or no. Yeah, well, it gets more confusing on the 1 hour. So let's just stay on the 15-minute. Change in state of delivery. And then I think we end the day around here. Right, I put these at 2 a.m. So yeah, we put in that low there. We come up, put on the high of the week on Friday, on Thursday, sorry, and then we consolidate Friday. Now let's look at the Forex Factory again. Tuesday, no news. Friday, no news. So Friday was the close. Monday was the accumulation and the manipulation of the week, which we'll get into later. We come down here. We kind of chop around on Tuesday, no news. FOMC puts in the low of the week. Expand out of it using that red folder as volatility. Come in, put the high of the week with Trump speaking and unemployment claims. Red news folders, highs and lows of the week, remember. And then Friday, no news. We just kind of chop. Right? Low probability day. And it's low probability because we don't expect expansions on this day. And if you're trading, you're trying to catch a big move, a big expansion. If you're just going back and forth, taking out buy side, taking out sell side, taking out buy side, you're gonna get chopped up and wrecked in that market. So that's how you frame the weekly candle based off of time. The higher low of the candle is going to be put in pretty early, Tuesday or Wednesday. High, and then the other opposite range is probably going to be put in like Thursday. It's typically the most common profile is to accumulate Monday, low Tuesday, expand Wednesday, high Thursday, chop Friday. This is the most common weekly profile you're going to see in price. Right? Again, or not again, but yeah. So that's how time relates to the week. There's 4 weeks in each month. I don't really want to get into the monthly candle, but usually you can expect the higher low of the monthly candle to be put in the first or second week, which again lines up with the economic calendar folder. So let's take a bullish month like July is typically bullish. So let's say this is July. All right, and this is just based off economic calendars. So week 1 will be here, week 2, week 3, week 4. Week 1 is always NFP week, and high volatility. You can usually expect some type of low to be put in here. Second week is typically CPI, week 2. So either we're gonna turtle soup this, just like the Wednesday weekly profile, and put in the low of the month, or maybe we just retrace kind of deeper and we don't put in the low of the month. But let's just say, for the example, the low of the month is putting on NFP because we're super duper bullish. CPI expands. Maybe we some type of FOMC manipulation. We go lower. We have that midweek reversal we just talked about. Wednesday taking the low, and then we expand higher. Friday chops. Last week is a continuation of this. Expand higher. Put in the high of the week. Week 4 chop. Right. So this would be a midweek reversal with FOMC. This would be NFP, just usually choppy price action. We don't trade NFP. CPI, big expansion. You can expect the expansion of the monthly candle to be in the CPI. FOMC comes some type of like retracement manipulation, and then we expand higher. You can see this lines up with the 4 elements of the market maker model, the 4 elements of the elements of a market. This video is getting long, so I'm trying to talk fast. We consolidate, expand, retrace, expand, and maybe we have some type of reversal and consolidation. Right? So that's how that'll probably just be I'll just make this an episode of how time relates to the weekly candle, and the next one will be about the daily, because what are we, like 20 minutes deep so far, and like we haven't even touched on the daily candle yet. So yeah, that'll just be it for the weekly candle and the monthly candle, and then I'll see you in the next video. All right.